Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday, July 19th edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Dennis Dick. Continue to fill in for Joel as he is out hanging out with Kid Rock in northern Michigan for the week. We got some news today, folks. Outside of earnings, we got Qualcomm, we got Chipotle. Of course, you saw that news yesterday. We've got VRTX with some great data, another dry ships, reverse split, and some potential M&A in the media space. And of course, we'll cover your earnings stocks, IBM, CSX, Morgan Stanley, USB, UAL, all reporting. So we're going to cover as many stocks as we can. We have two guests for you today. Our first up will be Kyle Dennis. He is an independent trader, mostly in biotechs. He'll be on at 8:35, and then at 8:50, you're going to be joined by Gordon Johnson, Managing Director at Axiom Capital. Gordon came out with a note today upgrading First Solar and Jinko Solar from holds to buy. So he's going to talk us through why he did that this morning. Dennis, how's it going today?
Not too bad. Looks like a quiet day, but like you said, Spencer, there is some individual stock news outside the earnings, and we had a couple big earnings with Morgan Stanley reporting this morning. We got a lot lined up tonight for earnings as well, with American Express and Qualcomm coming out. But the big news here, actually, well, the big news from yesterday was Chipotle, but I want to just start over here in the media stocks, because the big news breaking last night was that Scripps Networks, which is your HGTV, your food network, SNI is the stock on that. There is rumors here that they are going to join up with Discovery, which is DISCA or DISCK. You can pick which stock you want to choose. DISCA, I believe, is the more liquid one. Both of those stocks trading up substantially on this news. SNI trading up even more, because this is just a rumor to merge together. But also, I believe it was Reuters that was breaking last night that Viacom had actually tried, or has been actually trying to acquire SNI as well. So 14% SNI is up, and right now it looks like they might join up with Discovery, but this would be a big merger in the media stocks, and the media stocks have been under a lot of pressure. You wonder if this don't kickstart the whole sector.
And you pointed out, but I'd also like to say that Discovery and Scripps had discussed a merger in 2014. So let me pull up like a 3-year chart.
Yeah,
let me see.
This is the nice thing with the Benzinga Pro. You can go back and find that information too.
Right. They had discussed it in 2014, and Scripps had also been mentioned as part of another deal in 2016, I believe, and that was with Time Warner, I believe. So Scripps this is not new territory for them. I know that from I follow the space pretty closely. I know that the Scripps CEO, Discovery CEO, go back a long time. So this isn't like a totally implausible story. We are seeing some consolidation across the media space, so this is a real possibility, I'd say. But again, we don't know anything for sure. You and I were talking about some sympathy plays, Dennis, and could be seeing some sympathy moves across the entire space. We looked at SNI already. We talked about on the pre-market show Lionsgate, right? LGF.
I think, there's a lot of these stocks, even Disney here this morning. Look, Disney's catching a bit. It's up 50 cents. So, not saying that that's just directly because of it, but I will tell you off this news last night, I saw Disney lifting right away. So I think, you're seeing even a pop in a big stock like Disney. But yeah, let's, even, Viacom itself, we should look at that chart too, VIAB or VIA. VIAB is a more liquid one. It's funny that all these media stocks have two companies, but they were rumored by Reuters to be actually trying to buy SNI as well. But they're bid up here this morning, just slightly bid up. But look at this little one like AMCX. They make The Walking Dead. This is a smaller company, and maybe if you think there's going to start to be some consolidation in this industry, this could be one that could get scooped up. Smaller company. Do you have market cap AMCX? I could go race and find it too, but it's a smaller company. Maybe Spencer will go hunt that down. But here's the stock is bid up. No real trades. This one, it's only traded one share, 57.53, but it's bid up at 57.5, and nobody's hitting that bid. And I wouldn't be surprised, if this thing did tack on $1 at least, or a potential $1 or $2 here this morning, just because there's going to be speculation that other players might try to join up as well.
Yeah.
So if Viacom was sniffing around, they didn't get SNI, maybe they're going to try to get somebody else. I mean, other big players in the industry, you got Fox, obviously, FOX. It's bid up this morning. You mentioned Lionsgate, which is LGF.A or LGF.B. I don't see any action in those this morning, but this is a sector that really hasn't seen a lot of love, and all of a sudden it's going to get some major headlines here this morning. SNI obviously seeing the most love this morning. It's up 9 points here, but it got the rumors of the potential deal. So we're just speculating that there might be a little bit of spillover in other stocks in the sector.
8.78 is the market cap on Scripps. 3.81 billion the market cap on AMCX. So let's
somebody
go.
could scoop up AMCX for like $5 billion.
Yep.
Yep. Probably.
So
they make a lot of good shows. Like they did Breaking Bad, I believe, didn't they?
They did.
They did
Yep.
Breaking Bad.
They were
do
already...
Better Call Saul. I love that show. Like they put out good shows. AMC.
Yeah.
So and The Walking Dead obviously has been one of their best. I don't know about this other Walking Dead show. I've stopped watching that one, but The Walking Dead itself has been unbelievable.
You could argue that AMC was behind the renaissance of television. You could argue it started with HBO and The Sopranos in 2000, or you could argue it started with AMC in 2007 when they invested heavily in original programming, Breaking Bad, Walking Dead, Mad Men. So they've had a string of very successful shows. But going back to the Scripps chart, let's see if we can identify some support and resistance here, Dennis.
I mean, difficult to do because, when you've got a stock in play, I always say technicals go away. And I'm going to say it again. Technicals really meaningless. It's going to trade on headlines here now. I'll tell you, though, in the after-hours session, in the pre-market session, it's finding its home between $75 and $77. So, we're right at 76 here right now. This seems to be, where the risk arbs are saying, okay, well, we think this deal might potentially get done. This is where, we're, buying it up to because we want to still leave some meat on the bone. Maybe a deal gets done at 80 or 82 and there's some more meat on the bone for it there. Or maybe, Viacom comes back and, if they do group or team up here, maybe Viacom has some say in here as well. Either way, risk arbs are coming in here now. And when a stock is in play, technicals go away. So I'm not going to try to use a chart, try to speculate where SNI is going to go because it's going to go. If, all of a sudden this merger falls apart, it's going to be coming right back down to the low 70s, maybe into the 60s again. If, this merger doesn't get officially announced, it all depends on where the deal price is. Maybe it's going to be at 78, maybe it's going to be at 80, maybe it's only at $76. Maybe it's going to be at 85. So it all depends on the headlines coming. So watch your headlines from your Benzinga Pro on this SNI story.
Yeah, and if you're curious, this is fun. Take a look at the sheer monopolies at the top of the media industry. There's like a bajillion networks out there, but they're all owned by the same three companies. So I always find that.
Who are the big three?
Viacom, Time Warner. I guess those are the big two. Fox is another big one.
Yeah.
But AMC is very small. Scripps is very small. Discovery pretty small. But Fox, Time Warner, and Viacom are sort of, and CBS. Well, that is sort of Viacom.
Yeah,
right.
CBS we didn't talk about here this morning too, and CBS is bid up as well. CBS just traded 64.49, which put up 30 cents. It's bid at 64.35. Nobody's hitting that bid. Best offer is way up at 65.50. That's telling me the stock wants to go higher as well. So I think you're going to see some love in the media stocks, at least at the open here today. It'll be interesting to see if that continues on throughout the day because it's a sector that really has been out of favor. I mean, you look at that Viacom chart. This has been a stock that's been hated for a long time. I don't know if this is going to kickstart or not. I think, when I'm looking at a stock like Viacom, I see them as the one that's going to do the acquiring. They're big enough. They got cash. I see them as the one that's going to be doing the acquiring. So I don't see somebody coming up and scooping up Viacom. That's why I look to a smaller one like AMCX. I would think they would be more of a target, and I would think it would get more love than a stock like Viacom today. So that's, actually it's hindsight's 2020, but I was talking about this a couple of years ago when we were seeing, I was wondering if there was going to be consolidation in the industry, and I actually thought about buying AMCX in my investment portfolio just because of the potential for them to get scooped up by somebody. And I was a Walking Dead fan too. And I was saying to myself, well, don't get influenced because you watch the show and buy the stock. So I never did buy AMCX, but funny here, I think, you're going to see the stock up this morning on speculation that somebody might actually come and scoop them up.
All right, let's move on to some other movers of the day.
Chipotle.
I guess we got to hit Chipotle.
Okay, so yesterday on the pre-market show, we talked about, the Mizuho analyst coming up and upgrading the stock, and I said I didn't mind it down here. I was seeing some value, well, not really value, but I was seeing, where it had support before. I was saying long term I didn't like it, but I was saying short term I didn't mind the call from this analyst. Wow, and then a headline breaks that they got another foodborne illness here at the store, and they shut a store. Give us the headline, Spencer. What is the exact details of this headline that murdered Chipotle yesterday?
Well, the headline is apparently an isolated incident at a Sterling, Virginia restaurant. A number of people reported becoming sick. The Chipotle executive, the director of food safety, actually reached out to us and said they're aware of it, and the symptoms are consistent with norovirus. Norovirus, he said, does not come from their food supply, and they plan to reopen the restaurant. He said yesterday, I don't know if it ended up reopening or not, but people had been, I think it was, how many people reported being sick.
A lot of people.
I think it was 13 was the number. This is in mid-July, and so the norovirus thing. So first of all, Chipotle actually, if you go back, you can kind of see their history of the illnesses in the stock chart. So they actually made it over a year, Dennis, with nothing. 2015 was the big year, right? so 2015 was when they had October. You can see that right around here. October 2015 was when they had the E. coli breakout. Right, that was the first big news, and then later on in December of 2015 was when they had, remember, the Boston College thing, and that was norovirus, and that was in December of 2015 where the stock really sold off there. So they've kind of been holding steady in this trading range since then, but this is now the third outbreak in the past couple of years. Second time. It could be norovirus. They don't know for sure yet, but that's what the executives seem to imply. Regardless, I'm not going there anytime soon.
No, you know what? This was the worst possible headline to happen to Chipotle here, because I'll tell you, my own train of thought is kind of, what you were just saying here. I said, on the show multiple times when this was happening in 2015, even 2016, that I would not eat there because I'm scared to get sick. And you know what I was thinking? I went by Chipotle like a month or two ago. I was like, it's been a long time, maybe I'll venture back into a Chipotle again. I'll tell you, after this headline, I'm never ever going to a Chipotle again. My own opinion, but I'm never going to a Chipotle again. Nah, people get. I don't care where it comes from. You're getting me sick at your restaurant. I'm never going there again. And I think, this is their biggest issue, obviously, was, the people are scared to eat there. And this headline breaking out, they had to close a store because people were getting sick. Say it wasn't from your food supply, or say it wasn't from whatever. So I don't care. I get sick at your store. And I'm done with you. Like, if I'm a customer, I'd be done with you. So I think, we're going to see earnings here come on the 25th. I think, obviously, none of this is going to be priced into that earnings report. If for whatever reason it's a good report, and if for whatever reason it gets a nice pop, I'm thinking, about selling that into that report, selling short in that report. And I think you're going to see a lot of other people selling if it pops. Maybe it gets forgotten, maybe it's a one-off, but this is a terrible headline for the stock. And if you see another store, if you see one more incident where people start getting sick, it's gonna get killed, this stock. So, maybe it comes back if this was just a one-off and, it's not going to happen again. But you've also got the second issue here, which is why I've never owned Chipotle, is because it's a valuation issue. Even when before the whole foodborne illness stuff, it was still a stock that was priced for perfection. It was still a stock that was trading with, a multiple of, and I can't remember at the time, but I think it was, well into the 40s. So, as a value investor, I like to buy stuff with multiples under 20. And so now you look, growth is not there because of all the foodborne illness that happened in 2015. They've been trying to get the growth back, but that's not happening. And that's going to be really put a damper on it now with this new headline that just broke. And the risk here is that somebody else gets sick. And I do believe if you see another headline where there's another store with somebody getting sick, I think this thing could easily be under $300.
I think I'm not saying it's a good headline. Obviously, it's not. But I think to say that you'll never eat there again is a little bit. I'm saying from my opinion. Okay.
I'll tell you right now, now that I've seen this a year and a half later, because I feel like it's safe. It's gone. It's, it's over. A year and a half later, it all of a sudden shows up again. That's like telling me they don't know what the hell they're doing, or something's going on here. I'm not, my own opinion. And if you love Chipotle, go eat there all you want. But I'm saying I'm too scared to eat there, and it's not worth it to me. It's not like, oh, I love this Mexican food. There's lots of other Mexican Chipotle, lots of other of these, fast food Mexican restaurants that taste pretty darn good too. So I take my chance at Chipotle. So I think this is the worst headline for it. We've got some analysts weighing in too. I believe Wells Fargo downgrading it.
Yep.
Similar reasons. Obviously, everybody that's downgrading today is going to be for the same reasons I just cited. But what was Wells Fargo note?
Well, yeah, it is interesting to watch sort of the analysts sort of come out on the stock. So Raymond James chimed in with the midday note. Obviously, sales uncertainty. We've got Wells Fargo downgrading Chipotle to market perform. BMO downgrades to market perform. Ray J, I believe, also cut their Baird lowered their price target from $4.90 to $4.25. Telsey Advisory Group upgraded Chipotle to outperform this morning. So
why did they upgrade it?
They're coming in saying this is clearly a buying opportunity. To your point though about another one more headline, I agree with that. If this is an isolated incident, then. Yep. Then I'm okay. If one more comes out, I think remember back to 2015, they had the E. coli, I think, played out over several months. It was July, August, September, October. That it took 4 months for that thing to sort of play out. So if we get one more headline, then that becomes a trend, and I hate that. But one incident, I guess, puts me on alert, but I'm not running for the hills.
How many other customers are on alert now? That's why I think, it sets up nice. And, Guy Adami was saying maybe a buy it ahead of the report last night. He said that on Fast Money. I'm not doing that, but I would love to see a good report out of Chipotle here because, it's going to have none of the scare in it. And if it popped like 20 points because they reported, the customers coming back, maybe people forget about all this stuff, but I don't think so. I think your customer itself is what's going to matter. I think the next quarter is going to be a disaster. So I think this quarter, they could be okay because none of this is going to be baked into this quarterly numbers, especially when it's reporting on the 25th, which is in 6 days. But I think next quarter is going to be a disaster for the stock because I think you're going to have a lot of people like me saying, I'll just eat another Mexican joint or I'll eat another burrito shop. So. Yeah,
or I'll go to Panera, or I'll go to
Yeah, there's a million restaurants out there. Why are you going to go to the one that keeps making people sick?
Right.
I mean, this is a terrible headline for them. They had a brand issue already with all the scares from the E. coli issue, and now all of a sudden this happens again. That's scary.
All right.
And the valuation is an issue too, like we were saying. So valuation was always an issue for me. That's why I never owned the stock. And if you all of a sudden you're trying to go into from the growth to the value investor. I think the value investor's bid is a long ways down. If the growth investor isn't buying, I don't know who's buying at 373.
But as a trader, any targets today, upside or downside?
No, just looking at headlines. I mean, okay. So yeah, you could say, and we should get some levels. When we got down just in the end of 2016, we got down to the 352 area, but he had multiple lows in 360. So it's not surprising that's where it caught a bid there yesterday. So if you want to say, if you think this is and I'm saying this is not what I think, but I'm saying if you're a trader and you think this is just a one-time thing, this is just an isolated incident. Look at yesterday's low, 362. If it puts another bottom in there today, if it comes down there, maybe there's a couple downgrades that bring it down, gets down to 362, that's maybe a level where it bounces again. But if another headline breaks, and that's the risk, if another headline breaks, forget about 362. You'd be talking about 262. That's the risk, and that's why I'm not in it.
All right, 18 minutes. Let's get to some earnings because we did have some big ones today. Morgan Stanley, this was a good report. So let me give you the numbers here in just a second. I'm going to pull up the Morgan Stanley chart. Okay, Morgan Stanley Q2 EPS 87 cents versus 76 cent estimate. Sales of $9.5 versus $9.09 billion. They are announcing a $5 billion buyback, and they're raising their dividend from 20 cents to 25 cents per share. There's more numbers too. They came out and said that their return on equity stood at 9.1% for the quarter. 10% is what the CEO said the goal was for the year. And their 2.1% decrease in trading revenue was well lower than Goldman, who had a 17% fall in trading revenue for the quarter. So Morgan reported a fantastic quarter.
Stock trading up here nicely, 3% in the pre-market. You got the pre-market high here there, Spencer? Because I didn't get that information.
46.57.
Oh, yeah, we're right there. So, okay, and 2017, just looking in March, you got up to 47.33. I mean, that's the bogey, so that's probably where you're going to some resistance, call it $47. I mean, these banks all seem to move together to a certain extent. I know, the other ones haven't reported that great, and this was a better quarter, so obviously this is up near its highs here now. Goldman, obviously disappointed a little bit there yesterday, and it's down from those highs. We were saying the 230 resistance was resistance for Goldman, which remains. But Morgan Stanley itself, I would say, call it $47. That's a big level up there. If it can get up there, I think you find a few sellers there, but hard to just chase it up here because they all kind of move together. They're all interest rate sensitive now, and I'm just not chasing it up here this morning. But I think so. It gets up near the 47 area. I like it a little more from the short side. Maybe it gets down, back into the 45 handle. Maybe it's more of a buy. But at 46.40, kind of in the middle of nowhere for me.
It does seem like, though, they reported better numbers than the rest of the banks.
They did. And maybe that's why it's up near the highs right now. And JP Morgan is still, off 3-4 points from its highs. Citigroup's off from its highs a little bit. Bank of America's off from its highs. So deserved. Great quarter. Stock's up near its 52-week high.
All right, let's move on and just keep the earnings parade going. IBM, they report yesterday after the bell. Q2 adjusted EPS of $2.97 versus a $2.74 estimate. Sales of $19.3 versus $19.45 billion, so a miss on the sales, but a beat on the EPS. They did reaffirm their outlook for the fiscal year as far as EPS goes.
This has to hold 150. I know you can say, it's not held, it's through it in the pre-market. But pre-market, most people don't look at, what's happened in the pre-market. They look at the charts. Most of your charts just don't even count the pre-market action. They count the regular session action. So we got down to 149.79 back on May 11th. We're right there right now, 149.80. There's massive support at 150 if it can hold it. But if it takes it out and it looks like it wants to, I don't want any part of this. I think it's a nice setup, actually, shorting it through 150. I think I said that on the show a couple days ago when we were talking about this. It's still hanging out here. So it's not through with any conviction here. It's still trying to hold on. Obviously, there's somebody making a defense here for 149.80. As long as that holds, as long as that low holds, and I'm just talking about the low, I'll give it to you again, the 149.79 from May 11th. If that holds, it's okay. If that goes, the stocks could be 140. So you're right here at a turning point right now. It needs to hold this level. Somebody in the pre-market is just sitting there with an iceberg order, 149.80, saying this low is going to hold. Maybe it is. I'm going to wait till I see the real volume come in during the regular session and see what happens. We get it closed below 149.79. IBM's in a world of hurt.
All right, moving on now. Let's take a look at, where should we go? UAL? Let's do UAL.
So many, yeah. UAL, airlines all killed.
Yeah.
So UAL here, and they were all up near the highs. They were priced for perfection as well. Didn't get perfection. Give us the report, Spencer.
$2.75 versus a $2.63 estimate on the EPS. So they beat that number of sales. $10 billion versus $9.95 billion was the estimate. So a good Q2 as far as sales and EPS is concerned. They are updating. They did update their Q3 consolidated capacity, which is they're saying will be up 4% year over year. And they see that for the fiscal year, the consolidated capacity will be up 2.5% to 3.5% year over year.
A good quarter, but not good enough, and that's the problem here. Stock trading down 3.5% in the pre-market. When the stocks are up near their highs, coming in earnings, they're priced for perfection. UAL did not give us perfection here. That's why the stock is trading down 3.5% this morning. Delta trading down in sympathy. It's down 70 cents. LUV trading down. LUV an ugly head and shoulders here now for this stock. And you just wonder, here we were a week ago talking about the airlines at all-time highs. They're starting to look a little bit broken, these charts. So, I'm just looking at the LUV. That is a nice head and shoulders there. You can see the left shoulder there coming just at the end of June in the 62 area. The head up just over 64 at 64.39. Right shoulder forms nicely at the 62. Now you get the breakdown from the neckline here today off the catalyst from the UAL earnings. Stocks trading down near 60, 61 in the pre-market. Looks broken to me, that chart. So these airlines, which have been flying high, are starting to look hurt. Not coincidentally, USO has been starting to show some life. So we know airlines and oil go opposite directions, and oil has been showing a little bit of life here as well. And I think that's probably hurting the airlines too. Now, you get Delta breaking down through its key support. These charts all look broken, so I'm a seller of bounces in the airlines.
When did Warren buy again? In December, right?
What was Southwest? He's
No.
been in Southwest for a long time.
No, right. I'm saying he bought the other ones though, right?
He bought, I can't remember, which one? American? Which one was it?
Yeah, he bought American. I thought he bought UAL as well. Let me look up real quick. Yeah, that was a good point. He has been in LUV forever, but he bought into AAL, DAL, and UAL, and that was in November.
So he's still up.
I'm sorry. It was as of last September 30th. So
yeah, in September. Okay, so that was a great buy because September 30th, Delta, just looking at that, was down at $37 to 55 here now. UAL was down in September, was down at 50. It's at 78, or 76 now with the sell-off here today. So that puts it in perspective. These stocks have had a hell of a run, hell of a 6-month run. Warren Buffett's been right here again. I mean, the guy just gets things right. But they're lofty here now. They've had their run. The chart's starting to look broken to me. That's why I'm saying I think the top is in the airlines. Unless oil starts to collapse again, I think the top is in the airlines.
All right, moving on to a big mover of the day, not earnings though. Vertex Pharmaceuticals,
wow.
VRTX, good old-fashioned rally. They got some positive drug news yesterday after the bell. They reported positive phase 1 and 2 data from 3 different trials with a drug for cystic fibrosis. Good news all around for VRTX. And you're seeing that kind of bear out this morning.
Yeah, up 34 points here, so this is incredible. When you get a stock moving up 26%, you can immediately go and look at the ETFs and say, okay, well, any ETF that's even got a 4% holding in this thing is going to be up 1% just because of VRTX. So you can look at the IBB, and I'll just quickly grab you the holdings on that. I bet you it's upwards of 3 or 4%. I'm going to just grab it right now. So VRTX, the IBB has 4.13%. So basically, you got 1%, so you got 3 points just in IBB without the other biotechs doing anything. Just the VRTX holding will drive IBB up about 3 points here this morning. And then, not surprising, IBB was bid up last night. Is trading up here, or was trading up last night. Is bid up here this morning at 318.33. Some odd lots going off at 319. So that's going to help all, and it may spill over into some of the other biotechs too. Because I'm just looking, Celgene is trading up here this morning. Gilead is trading up. When you see one biotech going up 34 points, it's got a biggest market cap as Vertex does. It's going to help the rest of the stocks in the sector as well. So biotech continues to outperform here this year. VRTX, huge move for it, 34 points. I mean, if you go out to the charts and you just want to look at VRTX itself, you got to go out to the monthlies, and you can't even find anything. This is a new all-time high. So 143 was the old all-time high. VRTX is an uncharted waters up here at 166.
And Adam Fierstein of Stat News said, don't be surprised to see VRTX get the FDA approval for this drug to accelerate trials. That's how good it was. So
PBE has 4 points. So I'll just go through the ETFs that have a huge holding in Vertex. PBE is one. That's got 4.88%. BBH, that's one that's traded quite a bit. That's got a 4.35%. We already mentioned IBB. BIB has a 2.86% in VRTX. We have XBI has a 1.97% stake in VRTX. So all of these stocks, or all of these ETFs, are going to be helped substantially just because they hold VRTX. It's such a big move. It's always something to think about.
Dennis, how do you find that information? The funds with large exposures to a specific stock.
There's a good site there, etfchannel.com. You can go to.
Okay.
And you just type in the ticker. So we're doing a promo here for etfchannel.com.
We are.
But you just go in there, free site. Just you give your email, sign up, and you just type in the ticker symbol, and boom, it'll show you every ETF that's how much holdings it's got.
That's great. And I also use, not for this, but I use for ETF research, etfdb.com, etfdatabase.com.
There's quite a few sites that do it. So I like ETF Channel. I've just always went there. So if you have another one, chat or tweet at me, let me know if there's another better one too. Always interested in getting more information.
All right. Back to the earnings
Back to
parade.
the markets. We have not covered everything. We had CSX.
Yeah, I was
we've
going
had
to say.
Interactive Brokers. We've got, We just had a ton of stocks. USB reported. We got dry ships news.
Oh, dry ships. Oh, okay.
Want to talk dry ships?
All right, sure. Dry ships it is.
So I tweeted out last night.
Got me.
I'll just read you the one I just tweeted. I try to remember what I tweeted. Or do you have my tweet in front of you?
I think I do.
Either way.
Let me pull it up. Yeah.
Ships.
Whoops. I got you, Dennis. You tweeted it out
last
night.
This is what I tweeted last night.
I saw it. I saw it come across. You wrote that that guy that's in it for $20 million per share could have some trouble getting his money back.
Okay, so yeah, I had multiple tweets actually.
Oh yeah, okay.
So give us the headline first of all, if we know what it is. Reverse split. Another reverse
split to take effect July 21st.
I called it last night. Dry ships is the license to destroy shareholder capital. And that's exactly what this thing does. I mean, it's the master of destroying shareholder capital. We've had Jeff Goldman give us the rundown on how dry ships and how, this death spiral financing works. And, they can't get financing in any other way. So it's maybe not their fault, but this is the only way they get financing is by the death spiral financing, which basically you have, them issuing stock, and obviously, Jeff's explained it before. He's going to explain a lot better than me. But they come in and the debt holders there, or the people who they're issuing the stock to, get the rights to buy the stock a lot lower. Then they can exercise it dilutes it, then they reverse split it, and it brings the float back to about the same where it was. But what happens is you're just continuously moving capital from whoever is, getting this, or doing the financing, giving them the financing, and taking away from the shareholders. And if you look now on a split adjusted price, and this was a tweet from Michael Harris, and the now split adjusted all-time high of dry ships is $20 million a share. $20 million a share. I've never seen anything like that before. So it's reverse split so many times that the all-time high back in 2008 is $20 million a share. That's crazy.
That's insane. I just pasted a good article in the chat from the Journal about dry ships and about the sort of death spiral financing, and about the two people in particular who have been profiting enormously. One of being the CEO, the other being a
the CEO has been profiting from this.
The CEO of dry ships. Yeah. I highly recommend reading it. It's by Spencer Jacob from the Journal. Would recommend it. It's a little long, but
I just clicked the link there too, so we posted in the chat. But I'll read that too. Yeah. But I mean, this is just a disaster. You can't own this stock.
No.
Can it get pops? Can it get short squeezes? Sure, we've seen it happen before. But if you've got this stock thinking this thing's coming back to $20 million a share, if you think this thing's even coming back to $200 or $300, I mean, it just keeps continuing to go down. So, every time it's the same story. You buy this thing 2 months ago and you're down 90% on your investment. It's like clockwork. The thing just continues to fall 90% every couple of months. It's unbelievable. I've never seen a story like this. It's the worst story ever.
All right.
I think they should just come in here. I can't believe regulators can't come in here and shut this stuff down, because you're just destroying shareholder value. And people think, it's going to come back, or they think it's going to, it's 56 cents. What can I lose? Well, it's going to reverse split. You're going to probably lose 90% of your money in 2 months. It seems like the same thing we'll be talking about this thing with another reverse split. What is it? 7 for 1 or 1 for 7 now? Reverse split?
Yeah.
Yeah. They need to stop, being able to do these reverse splits, because it just destroys shareholders that don't understand it.
All right, let's do one more earnings before we go to our first guest. So let's do CSX. They reported yesterday after the bell. Let me pull up the chart there. Q2 adjusted EPS of 64 cents versus a 59-cent estimate. Also, they announced a $500 million buyback. I'm sorry. I gave you the adjusted EPS. Let me give you the actual. Let me give you the revenue to $2.933 billion versus $2.85 billion. So they beat on the rev and they beat on the EPS, and they had a little buyback.
Decent report. Stock price for perfection. Beginning of 2017, it's $36. It's 54. I mean, we're in a half a year, we've run up 50% or 40%. So it's just basically too much too fast.
Isn't that the case for everyone though? Every single stock I look at, it's been this is up 30%, it's up 40%, it's up 45%. It's everyone. It's the market.
No, that's not everyone. It's
Okay.
certain stocks. So there's certain stocks that have been led because you can look at stocks like, Coca-Cola. That stock is actually flat or it's up $1 for 2017.
Okay.
AT&T and Verizon are both down in 2017. I mean, even, if you look at Google here, Google's had a run up, but it's not up 35%. For 2017, it's up 100 points, up 10%. It's a little more reasonable. S&P's up 9. This stock's up 30 or 40. So it's had its run. It's had its run already. And, now you say, why? Well, it was a good report. Why is it not up another 5 points? It was already baked in. It's run up a long way. So that's what when we always say this in earnings season, a lot of times look at the chart before it even reports. And you can say, okay, our expectations are probably very high because the stock has been straight up for 4 months or 3 months. So if that's the case, they need to really blow it away. They didn't blow it away, stock is down.
Yep, same thing that happened to this happens a lot. It's happened to Micron.
To the airlines. It just happened to UAL.
Yeah, exactly. All right, 8:35. We're going to take our first break of the day. We're going to grab our first guest, Kyle Dennis. He is a biotech trader. His site is biotechbreakouts.com. We'll be right back with Kyle. All right. And as promised, we're on the line with Kyle Dennis. He's a trader. His site is biotechbreakouts.com. Focused, obviously, on biotechs. Kyle, how's it going today?
Going pretty well. How about you guys?
Going pretty well. So we covered one biotech this morning. There's one that's in the news, and that's VRTX. They had some great data yesterday after the bell. So I wanted to ask you, I don't know if you follow this stock, but if you do or if you don't, when a stock breaks out on great data like this, as a trader, what are you looking at? What's your strategy?
Well, at first, I always lean towards profit taking because it's up so significantly. In the short term, usually what happens is you get some profit taking in the short term, and then the fundamental analysis comes into play. And this is really good news long term for the company. So I expect that if there is any profit taking, it's going to get bought up pretty quickly because in the long term, this is a big biotech, and they have a bunch of new revenue coming online now. So it's going to interest a lot of the big funds and just, individual investors out there because it's probably going to become one of the faster growing biotech companies on the market now.
So are you trading the stock, or are you trading for the ETFs that are exposed to it? How do you do that?
I typically, I'm more focused on the smaller cap biotechs.
Okay.
On this particular name, I would buy any weakness, especially if it was like, say, a 50% retracement from this gap up here. I would be a buyer on that profit taking long term. But mostly I focus on smaller caps. So the positive effect this is going to have on the IVV is going to be good for small cap biotechs as well.
And let's get to one of those small cap names, VSAR, Visartis. Visartis is the stock there. What jumps out to you? First of all, are you more of a fundamentals guy, technicals guy, or are you pretty much split down the middle?
I'm kind of split down the middle because what I like to do is find companies that have upcoming events, catalyst events I call them, and then I'll trade them, about 4 to 6 weeks ahead of their event. So I'm kind of a longer-term swing trader. So with that comes a little bit of fundamental analysis and then also technical analysis.
Okay, so then what jumps out to you with VSAR?
So what's interesting with that one from a fundamental standpoint is that they have phase 3 data, which is really important for a growth hormone deficiency drug coming out in September. And then on top of that, the two of the best biotech funds, the Baker Brothers and the Perceptive Advisors, both own this name ahead of this event. And those guys usually are longer-term biased, where they are going to hold through the actual event. And then on top of that, you have you brought it up the chart there, it's a really nice continuation pattern riding at the bottom end of a trend line right now. So for me, I would look to get long the stock, in the $17 region and potentially have a goal of, say, between 20.50 and maybe 21.50 ahead of September.
Looking at another one that you brought up is a VKTX. I've never heard of these small cap names. What can you tell us about that?
Yeah, so I tend to think actually VSAR has a good chance of having good data. This one's the complete opposite. I don't think that they have any chance of good data. But what they do have is a great chance for a catalyst run-up. They have 2 data events coming up. Both are due in the fourth quarter. One's for acute hip fracture, and the other one's for hypercholesterolemia. And they're both phase 2. So what I would be looking to do here is to get long the stock. I'm already long 10,000 shares for full disclosure at 106. I'd look to get long the stock and pick up some more shares closer to 1, and then trade it up to, say, 140 or 150 ahead of these 2 catalyst events. And this type of strategy has been working very well since this whole year. Actually, since the election in November, this biotech index as a whole has been pretty much on a steady upgrind since then, and these catalyst plays have been performing really well.
Kyle, a couple questions revolving around this strategy. First of all, is how do you find the dates for when these actually, do they give the actual dates, or do they just say fourth quarter when they're going to actually have the the results of their studies, or do they give you an actual date sometimes?
Sure, that's a great question. Actually, the companies, generally speaking, will give you a quarter, so fourth quarter, first quarter, and those are good to trade. What I like to do is assume if they say fourth quarter, it's going to come out in September. That way, I limit my risk, because if I sell it before September, I'm not going to get the chance to have the data come out,
right?
Which could be a big upside or a big downside. Some companies, like what was the one yesterday? Novavax, NVAX. They just told us yesterday, hey, we're going to have some data at a meeting on Monday, this upcoming Monday. And you saw the price action yesterday. It's a little small biotech.
Take off.
It went from about $1.20 to Novavax, $1.20 to I think $1.50 in one day. A big 30% gainer. So those are the types of things that I like to watch. And I typed in the chat room there. You can go to a free site called biopharmcatalyst.com, and they have a list of every event that's coming up, small cap and large cap. Almost everything's on there. You can go to that site and check it out for free.
Well, that's a great site. That's a great tool right there, because obviously if you're trading these smaller biotech stocks, they're going to trade around. But when they have these events, there can be 50% moves up, 50% moves down in a hurry. So obviously knowing those dates if you're in these stocks is very important. Okay, so you like the smaller ones. What other ones do you like out there right now?
One that I continue to like, I actually sold for a profit, but I think that it's worthwhile on a pullback, is AcceleRx, which is ACRX is the ticker. They have 2 events upcoming as well. The first one is coming up here soon, which is a phase 3 trial for basically a pain drug called Zalviso that I actually think is going to read out positive. And they also have an FDA approval date, for another drug on October the 12th. So they have 2 upcoming catalyst events. Now, I owned this stock a couple weeks ago and sold it into the strength here, so I'm looking to buy it back down if it fills that gap down there, maybe 250 or 260. I don't want to chase it up here, but I'd be interested on a pullback.
So do you ever get caught in one of these events, like maybe hold on a little bit too long and be like, oh no, the number came out? And have you ever been caught before?
Yeah, absolutely. And
what do you do?
Why, well, the number one is pre-planning ahead of time. So,
okay.
I like to follow a rule where I don't put any more than 10% of my total account into any one of these trades, because you're right, you never know. Bad data can come out, and then you're sitting at a 20, 30, 40% loss, and you have to take that loss, and it's painful. That's why you don't want to have your whole account in something so speculative. That's why. So I follow that rule about 10 to 15%.
Oh, I think
Did we lose Kyle?
I think we just lost Kyle. Let me see.
Yeah, we did. Maybe try him back one more time here, and I'll just reiterate what he's talking about there. So great site here, biofarmcatalyst.com, BIOPHARMCATALYST.com is the site that he was talking about. That has all these dates.
Kyle,
and
you
these
with
events.
us?
Yeah, sorry, I got cut off there.
Oh, that's okay.
I think the phone dropped.
So we were just talking about what you do when you get stuck in these things, or stuck in a number that you didn't want to hold into.
Yeah, so if there is no upcoming catalyst date after, if you hit bad data and there's no upcoming other event to look forward in the future, in the near term, usually I just have to take loss, which is rough to do. But something like ACRX, which is the reason why I like that one, is say for the first catalyst it's a miss and it goes down 50%. Still, right behind that, you have an FDA approval date. So you can see the stock come right back. So it's nice to have two catalyst dates pretty, in the near term, so that you can have that additional upside if, for whatever reason, you get caught in some bad data. But the plan is to never hold through data. At least that's my strategy.
All right. We've been on the line with Kyle Dennis. He's a trader. He's a co-founder of biotechbreakouts.com. Kyle, thanks so much for joining us today. Thanks for the insight. We'll be in touch.
Thank you. Take care, guys.
Thanks, Kyle.
8:47 now. Dennis, before we go grab Gordon Johnson, and we know that could take us right up to 9. So can you give us a quick and balanced look before we grab?
Let's go take a look and see what we see. Alibaba, holy cow! How many days in a row have I said Alibaba was a buy
2 weeks
balance?
at least.
It's like every day. And, so there's a play here. There's some institutions that accumulating a lot of Alibaba on the open because you don't see that many days where it has a buy and balance in a row. 193,000 to buy here this one. It's the biggest one I've seen for a long time. Alibaba is up another 2 points. It's been a monster. Out of all the Momos, I still like this one the best. It's had a hell of a run here now. We've been kind of, saying we've liked it ever since they had that good quarter. We've liked it in the 130s. We've liked it in the 140s. I continue to like it here in the 150s, but it's starting to get a little bit more lofty now. But still, it could go for a bit. 193,000 shares to buy, so some institutions saying it's going higher. Morgan Stanley, 30,000 to buy, not surprising. It's trading up $1.61. General Electric sell and balance every day. 47,000 shares to sell in GE, although I don't know. GE is one that I think might get some love here, even from the whole news with the SNI, because they still own. Does GE still own ABC? Don't they?
Yes.
I believe they do. I don't think they ever spun it off. Because they had the spinoff of Synchrony Financial, which is the financial part of it. But
yep.
I think GE still. Maybe I'm wrong. So
I believe you're correct.
I believe I'm correct too, but I'm not 100% correct. So maybe I'm wrong. So or NBC. It's NBC they would own before. I'm not sure. If I'm wrong, correct me on that. But if they do have that media exposure still in the stock, which I don't remember if they own so much.
Comcast owns NBC now, Dennis.
Oh, so maybe they don't own it anymore.
But I thought it was only a stake. Maybe I'm just wrong.
Okay. Does GE still own?
I thought it was just a stake.
It was NBC.
I know that. All right, Brent's saying that Comcast owns 100% of NBC. So.
Does GE own any media network anymore?
Oh,
they used to.
That's a good question.
2013, it looks like they sold NBC.
Wait, yeah. Hey, Dennis.
They sold it. Brentster!
I know. Look at me.
I just hunted it down. It looks like they sold NBC to Comcast in 2013.
There it is. I was going to say the reason I know that, Dennis, is because I remember when GE did own NBC and all the people on CNBC would have to say, we can only own GE.
Right.
Yep, exactly. And now they can own Comcast. So there you go.
There you go.
Great.
All right, I'm looking.
Okay, so how's it going, Brentster?
It's going good. I'm looking forward to Gordon. I popped on my headset here to listen in on your guys' conversation. So.
And we're about to call Gordon
Cool.
right now. Gordon came out with a note today on, he covers the solar space. He came out and he upgraded a pair of stocks. He upgraded First Solar and he upgraded Jinko Solar, so JKS and SLR are the two stocks. We're going to be right back with Gordon Johnson to talk about why he did that in a moment. And as promised, we are on the line with Gordon Johnson, Managing Director at Axiom Capital Management, one of the best, if not the best, analysts in the solar space. Gordon, how's it going today?
Hey, thanks for that intro. That was great. It's going well.
Thanks for coming on short notice. So we reached out this morning because you came out with a note today on First. I guess we'll start with First Solar. I was actually looking back at your coverage of the stock. So you initiated First Solar back earlier in the year. Right at first, you initiated at a sell in February. You upgraded it to a hold in May. Now you're upgrading it to a buy now. Why?
Yeah. So, 1 second. Let me just. But yeah. So we upgraded to a hold and we put a $43 price target, risk-adjusted price target on First Solar when the stock was 30. The reason we did that is because we thought that the Section 201. Tariff that has been proposed by Suniva and subsequently SolarWorld would spark interest in First Solar. And quite simply put, we thought that, the bulk of analysts, you had, 7 holds, 13 buys. You have 7 holds and 13 buys. I'm sorry, 7 buys and 13 holds rather on First Solar. And we thought that the bulk of analysts were going to say, look, right now module price in the U.S. at 35 cents. If this trade case goes through, they move to 78 cents. At 78 cents, First Solar's module business is worth significantly more than what it's worth today. And the number we came up with, was roughly $78 per share. The stock was trading at 30. So we thought there was a 60-40 probability that First Solar would that the trade case would go through. So using that probability, 60% on 78. 40% on what we thought was, if the trade case doesn't go through, a $21 price target. We got a $43 risk-adjusted target, so we took our price up. Clearly, the stock went from 30 to 43. It was a decent call. The reason why we're upgrading to buy today is because, based on our checks at the Intersolar conference last week in San Francisco, we are hearing that First Solar is delaying the ramp up of its Series 6 technology and instead focusing on ramping back up its Series 4 technology. And given that we believe First Solar is selling modules at 50 to probably 60 cents between that level, and also we're hearing rumblings that they're sold out through third quarter of 2018, we believe the company is going to show significant upside, potentially significant upside to consensus estimates, which have not changed dramatically. And given that you have those 13 holds, we think that the sell side could become much more optimistic as we see these earnings, as we see First Solar beat earnings. And even though this is temporary, we think that, as we've seen in solar over the past 10 years, even with temporary earnings upside, people and investors put multiples on those earnings. And given the underperformance of the solar sector versus the broader market overall, we think you could have a pretty continued violent move higher in the stocks.
What is the difference between
the stock?
What is the difference between the Series 4 and the Series 6 technology?
Yeah, so it's just the efficiency. So which effectively boils down to the cost per watt. First Solar is saying that the Series 6 will get their cost per watt down to 22 cents thus putting them in line to compete with the Chinese. The Series 4 technology, they haven't officially disclosed what the cost per watt is, but it's significantly higher than that, probably in the anywhere from 34 to 37 cents per watt range.
And so, what is the timeline here now going forward for as far as this agreement and when it could or could not or may or may not take effect?
Yeah, so that's a good question. So look at our note. The International Trade Commission is expected to make a determination of whether damage was done by August 24th and give its recommendation to the president by October 23rd. And the president has 1 to 3 months after receiving the ITC's recommendation to make his decision. So we think the Section 201 outcome will not be made public to investors until November 17th or as late as January 2018. So until that time, we think the U.S. solar market is in a bull market. And the reason is because we believe IPPs, independent power producers, are stockpiling modules, because if you have a PPA on a project and you have a determined date at which you have to complete that project, there is penalties, effectively penalties that you have to pay if you don't finish the project by that date. So what guys are doing is they're saying, look, module prices were 35 cents. We can get them for 45 to 50 cents today. We'll go ahead and buy those modules for all of the projects we have through next year. Because if we don't, we could potentially have to buy those modules at 78 cents. So it's not organic demand. It's inorganic demand due to this uncertainty around government policy. But nonetheless, we believe it will drive estimates higher across the solar module space, particularly for First Solar. And we think that's why you probably want to be long this stock over the near term.
Gordon, you also upgraded JASO here today, which is JA Solar. Tell us about that.
Yeah, so JA Solar, so there's the First Solar story. So with the Section 201, there's two outcomes. One is it does not go through. That's bad for the entire solar industry. One is that it does go through. We think that's good for First Solar, but that's actually bad for the Chinese guys. But again, we're in a bull market in the U.S. through November and potentially as far as January of 2018. So what's happening? So the Chinese module guys forward sold all of their budgeted U.S. supply at the beginning of this year, at the beginning of 2017. And the reason was there's a big fit cut in China that happened July 1, and there was fear that module prices were going to collapse in the second half. So these guys are effectively hedging the risk of module prices collapsing, so they forward sold all of their modules that were slated for the U.S. at the beginning of this year. The problem is, unexpectedly, the Section 201 came about. And when the Section 201 came about, this effectively drove this dynamic where IPPs who had projects where they weren't expected to they weren't expecting modules to increase significantly in the U.S. All of a sudden, there was this big demand for modules in the U.S. as guys stockpile. Now, again, it's inorganic, but nonetheless, that demand is real. So what the Chinese guys are doing is they're canceling contracts with non-core customers for 2017 and reselling those modules at today's prevailing price, 45 to 50 cents, where those contracts are probably signed at 35 to 40 cents. So they're price gouging. But that will resonate in higher earnings estimates for these guys in both 2Q, but we believe more so in 3Q. And if you take what we think JSO can earn in 3Q, annualize it and put a mid-cycle multiple on it, the stock is a $7 stock, which is, close to where the new takeout, offer was stated, i.e. 680. And as well, given we think there's going to be upside to a lot of numbers to the solar space, we think optimism is going to increase. These stocks are heavily shorted, and a lot of guys have walked away from these stocks. We just don't think it makes sense to be, shorting JSO at this point.
So, Gordon, just to recap, you said we're in a bull market right now for solar. Bull market until when?
In the U.S.
In the U.S. until when?
Until November and potentially as late November 2017 and potentially as late as January 2018.
Okay. And then last one, and we'll let you go. You mentioned that there are other stocks you had commented on in your note. What were they, and what were those comments?
Yeah, so CSIQ and Jinko, as well as Yingli. And with respect to CSIQ, we have a buy rating, and we have had a buy rating. We valued CSIQ's module business at -$1. But with this dynamic in 3Q, we think people could derive a value of $18 for their module business. So when you include our valuation for their project business of roughly $19, the upside to this stock could be tremendous. You're talking $36 to $37. With respect to JKS, a lot of people are scratching their head. This thing is up 50% over the past, several months. The analysis we did on JKS suggests, again, annualizing their Q3, what we think they could print in Q3, and applying a mid-cycle multiple, it seems like this thing could have upside to 28. So, essentially, I think what's happening is investors are, diving into these stocks on the long side on the prospect of, better earnings due to this U.S. bull market. And even though it's temporary, we've seen time and time again, solar investors put a multiple on these temporary earnings, and we think that's what's happening. So what we tried to do in the note is quantify what we think the upside is to these stocks. For JKS, we think it's $28. Stocks at 24. For Canadian Solar, we think it could be as high as $36, $37. Stocks at just under 17. For First Solar, we think the fair value is going to be 51 based on this dynamic, but it will probably overshoot because a lot of people are scared to be in Chinese solar stocks given what happened to Sun Edison. So when they look for a solar investment, they're looking to U.S. solar stocks, First Solar, SunPower. The reason why SunPower we think is a big mistake here is because First Solar has been excluded from the scope of the Section 201. First Solar makes its panels in Malaysia. SunPower makes its panels in Malaysia, and they haven't. So if there's a Section 201, demand for SunPower's panels are going to collapse. The market is not seeing that, right? SunPower is up big, but it should not be. And with respect to Yingli, we still have a sell in Yingli. Even with this dynamic, we think they burn a lot of cash, and they have a lot of debt, and they have a higher cost for a while. It's just a bad company compared to its peers. Not saying the management's bad, but just compared to its peers, they're the worst position. So those are the other comments we made in the note.
All right, Gordon Johnson. He's the managing director at Axiom Capital Management. Gordon, thanks so much for joining us today.
Absolutely. Thanks for having me.
All right, 9:01 now. So we did go over 9, Dennis. I don't know if you're still with us or if you're trading. Here. Okay, that's great stuff.
I always listen to everything Gordon saes. And we know, full disclosure, I own CSIQ just because of Gordon Johnson. I bought it back in the 13s when he originally upgraded. So thanks, Gordon.
I don't know if he can hear you, but I'll thank him.
I'm still sticking with it. You say that $36, I like that.
All right.
So I'm sticking with it.
All right, we'll let you go, Dennis. Hope you enjoyed our show, everyone. As far as tomorrow, you can catch Greg Harmon on the show. He's the founder of Dragonfly Capital Management. As far as today's show, if you want to catch it again, you can do so on youtube.com/BenzingaTV. It's Benzinga's YouTube channel. You can subscribe to that and get notified whenever we go live. You can watch the show as it aired on YouTube or catch our podcast on iTunes, SoundCloud, and Stitcher. Don't forget also about the Benzinga FinTech Summit. BZSummit.com is the website. That's our event coming up in September in San Francisco. To learn more, go to BZSummit.com. Have a good rest of your day, folks. We'll be back with you on Thursday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.